Well, to tell us more about what's been making headlines in finance and economic news this week, we're joined now by Suzanne Haddan, who's the Managing Director at BFG Financial Services. Welcome, Suzanne. It's great to have you in the studio again.
Great to be here.
Suzanne,
so nice to see you in person.
I know.
Yes, exactly. Now, let's focus a bit on tax because we're coming towards the end of the financial year, so a lot of people are starting to think about their tax affairs. And we saw the government allow people to access a big chunk of their super as this coronavirus pandemic hit. And some people are using this to dodge paying tax. How are they doing that, and how is the ATO cracking down?
So there's a couple of points there. The first is that some people didn't follow the rules as far as how to access the superannuation because it was self-assessment. And what they forget is the ATO has wonderful data matching abilities. They do know what most of us earn. So if you've said you've dropped by 20% in your income and you actually didn't, you could be in some difficulties. The issue is for people who have taken money out of super inappropriately is that money may now be taxable. And further, if you're found to be giving false or misleading statements, not just a genuine mistake, you could be fined $12,000 each time. So it's serious stuff. The important thing here is don't get too cute, because the tax office will not admire you. And some people have taken money out of super with the view of recontributing it and claiming a tax deduction. So they're compounding their sins in the eyes of the tax office. So a lot of caution needs to be taken there.
But at the same time, for low-income earners, that's something that can benefit them in terms of tax time?
Absolutely. Now, for low-income earners, and that's generally someone earning under about $38,500, they can put $1,000 into their superannuation and get $500 support from the government. If you're earning under 53,000 odd, you get a bit of support, and that's a great one. Just be careful, because we are the 27th of June, and some super funds are shutting their doors almost for accepting contributions. It's not when it leaves your bank account, when it's arrived at the super fund. Very important.
Right.
Interestingly, as well, as we approach the end of the financial year, a lot of people will have had their work situations change this year, or perhaps they're out of work, you know, whether they're working from home. There's a lot of variation. And so what can people do or keep in mind in this tax time?
Okay, so there's a couple of things, even back to super. If you have had a much lower income and you normally like to contribute some money to super and claim a tax deduction, don't forget that we're now able to carry forward our unused contribution limit to next year if you've got under $500,000 in super, which is most people. So that's the first one. Don't be concerned if your income's too low to contribute this year. The second is be aware of a couple of deductions that you might be eligible for. The first is if you're working from home, the tax office has made it a bit simpler to claim the deduction, which is the 80 cents per hour, which doesn't seem much, but you add that up over a few months, it could be some hundreds of dollars. Get that My Deduction app, which I know you love, Johanna, which I've raised a couple of years to get organised for your tax return. But don't rush in to submit it too quickly, because now a lot of your information is directed to the tax office automatically, but they might not have it to July, and so you might be using incorrect information. So wait until sort of mid-August, I think, before you rush in to do your tax return.
You know, some people, of course, actually a lot of people just sort of feel that, well, filing my tax returns can be just too much. It's confusing and it's overwhelming. So they go to their accountant and they get their accountant to file it for them. Remember last year, we were talking to you about it too. There was some dodgy accounting that was happening around that time as well. And obviously the ATO has been cracking down on that as well. How do you ensure that your accountant is working to your best interest and it's all above board?
So as an accountant, we certainly hope our registered tax agents do the right thing, but the main thing is give them the correct information. It shouldn't be a national pastime doing dodgy things on your tax return. So if in doubt, list all your deductions, what you've spent at home, what you've used for travel, your donations, your super contributions, and have them all listed either on the My Deductions app from the ATO and give that to your accountant. And then when you get your tax return, ultimately you are responsible. So you need to be able to tick off and say, yes, 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 that's valid, because you'll be signing for it. So just because you get us to do your tax return, you ultimately are responsible yourself. So make sure you check it and declare all your income.
Fantastic tips. Thank you so much, Suzanne, for coming in and guiding us through these times.
My pleasure.
Good to see you.